That's absolutely right. I think it is going to have an impact at some point. I think, and we've already seen the squeeze on first-time buyers that require more leverage, younger households, and I think the unemployment is sort of seems to be coming through at the younger age groups and in certain sectors at the moment. I think the key thing to take with the housing market is that half of homeowners in the UK have no mortgage, and many of the rest have quite low levels of loan to value. And I think we're starting to see more movement from the wealthier demographics, the people who are less debt reliant, who might be more resilient to unemployment and that increasing. But I think that the real squeeze on unemployment and then the economic pressures are going to come through probably in the first half of next year.
What extent has the government's shift on stamp duty up to £500,000 made a difference?
Yes, that's really boosted housing markets where house prices are between £400,000 and £600,000 sterling. It's really boosted the south of England. In London, in the 2 weeks after the budget, we saw a 27% increase in sales agreed. So that's acted as stimulus. That's brought a few more people into the market who are probably waiting on some action from the government. And I think that will support the market, but it doesn't explain all the growth we've seen. This is a broad-based recovery we're seeing, and stamp duty has certainly been a booster.
Richard, the mortgage availability is an interesting question from here on in, because we do see some tightening of lending standards across the banks, and also notably one or two organisations now who appear disinterested in the bank of mum and dad getting involved in supporting purchases. What's your prediction on how this will unfold?
Well, I think absolutely there's been a squeeze on higher loan-to-value mortgages. And again, the recovery we've seen the last 5 years in the housing market has really been driven by first-time buyers, who are the largest group of purchasers at about 36% of sales a year. I mean, that number's going to come off. I think we're expecting a 20% drop in headline turnover this year to just over 800,000 purchases. And I think we're going to see an increase in the number of people buying with equity who are less mortgage reliant. And I think as banks look to protect themselves, look to manage risk, I think they'd ideally want people who can stand on their own 2 feet and not looking for support. They almost want to they don't mind lending at higher loan to values, but they want people with the sort of the best quality credit coming through. And that's the way they're protecting themselves. So we're expected to see less higher loan to value mortgages, higher loan to value still there. But I think we're going to see a switch in the type of buyers that are moving in the market this year.
And Richard, what about international demand at this point? The pound still looks relatively attractive at these levels. The issue of Hong Kong has obviously had a lot of potential buyers from that market looking at the UK. How robust are the international demand trends towards the end of the year?
They're looking stronger, I think, for the last 3 or 4 years, because all the tax changes that happened 4 or 5 years ago. The level of the appreciation in house prices, particularly in London. London's had a sort of slightly weaker period for the last 3 or 4 years. So international levels of demand have cooled somewhat, but they're still there and a key part of the market, again, particularly in London. I think one of the challenges coming up is not related to house prices, but we're seeing some weakness in the rental market coming through with the lack of international travel. Rents are actually down in London by 3%. And so the question is, I think we'll see investors coming in. I think investors tend to come in when there's quite a big fluctuation in sterling relative to other currencies. That seems unlikely in the short term. And it's how much those investors are going to start focusing on the cash flow outlook for the UK. I mean, outside London, rents are holding up. In London, we expect them to be weaker in the second half of the year. So whilst investors might be coming in, I think they'll be nervous and just look again at the level of yield they want for the outlook, not just for house prices, but also income.